So this video is for beginner trader who want to learn Elliott wave theory and key chart pattern, ending diagonal chart pattern. When you will read this book Elliott wave principle by Robert Proctor, then this book give you two example of ending diagonal chart pattern. This one for bullish trend and this one for bearish trend. You can use this theory as a visual language or cram those verbal rules written in this book. So in this video, I will explain in detail, step by step, how you can trade this chart pattern in bullish or bearish trend. Because special thing about this chart pattern is before market turn and it goes down or up 90-degree, this chart pattern tells in advance. And why this video when you can read this book? Because this book does not have complete information and there is not detailed information about this chart pattern. Because book will show you image like this, but market will show you chart pattern with minor difference, and those minor difference will create confusion for you. First of all, take this example from gold H1 time frame, and for more clarity let's change color of chart. Then here you have both example bearish and bullish, and ending diagonal chart pattern can happen in two format. The first one in impulsive wave and second one in corrective wave. In impulsive wave, ending diagonal comes in last fifth wave, and in corrective wave, ending diagonal chart pattern comes in last wave C. But nature of both pattern are same. So here you have 135 impulsive wave example. Here you have ABC corrective wave example. And before we explain everything, number one question, that where to start wave counting and how you will know that wave 1 will start from here and fifth wave will end right here. This thing depends on your wave counting skill. Until you have clear understanding of previous wave, you cannot start wave counting for next trend. Since this WXY wave counting give a stop here, so we start wave counting here. Then this 135 wave counting, so next wave counting start from here. So until you do not have understanding of previous wave with wave counting, you cannot start even first impulsive wave. So knowledge of first impulsive wave depends on your last wave, and a book teach you nothing that how you can measure first impulsive wave. Then let's start wave counting from this top to bottom, and we have first impulsive wave 1, then correction wave 2, then third impulsive wave 3, and fourth corrective wave 4, and now we go into fifth impulsive wave. Since chart pattern comes in last wave, in case of impulsive that will be fifth wave, in case of correction that will be C wave. So our fourth wave end right here, and we will start counting ending diagonal chart pattern, and we will name it wave 1, then correction wave 2, wave 3, 4 and 5, and our chart pattern end with 5 wave. But confusion comes for beginner when you are doing wave counting in impulsive wave. In impulsive wave, this is your fourth wave and this is your first wave. There should be gap between these two, that is the big difference between ending diagonal chart pattern and impulsive wave. In ending diagonal, wave can retrace back and break previous high, but in impulsive wave, there should be big gap between fourth and first wave. Otherwise, your wave counting is wrong. But in case of ending diagonal chart pattern, there is no gap between first and fourth wave. That is more confusing thing because both are different. These are your 5 impulsive wave and this is your ending diagonal. And to increase your learning speed, to identify this ending diagonal chart pattern faster, you start with end of fourth wave. The lower trend line should be retested 3 times. 1, 2, 3, and upper trend line can be retested 2 times. That's enough, but lower trend line should be tested 3 times. When fifth wave retest lower trend line third time, that is end of your chart pattern. For more clarity of beginner trader, you do not have experience and complete knowledge of wave counting. In our Telegram channel, when this chart pattern was made and price was testing this lower trend line, that was end of chart pattern. I said this chart pattern in Telegram channel because best way is to do wave counting and buying right at the bottom. That is aggressive trading because Elliott wave is aggressive. It gives you exact top and bottom with accurate price number. Or if you have confusion in wave counting, then simple trick always trying to buying retest of lower trend line because last wave end on retest of lower trend line. That is your first entry, and when upper trend line break, that is clear confirmation that chart pattern has been ended and new trend has been started. Your second entry comes on breakout. If your lucks work, then you can get retest entry, but ending diagonal chart pattern say that instant trend reversal, so there is no guarantee that you can get retest entry. And another thing, that how you can get confidence that trend will end right here, your wave counting is accurate, because when this chart pattern was made and it was testing lower trend line, there was a rumor that Fed will hike 50 basis point in December, and now it is crystal clear, everyone know this information, but that information was leaked when this bottom was made. And immediately when Indian buy gold for Diwali, the information was leaked by Wall Street Journal. And for clear confirmation for beginner trader, so they can get confidence, told in advance that this is time for buying physical gold, and market has to jump either today before market closing or after market open on Monday. But market jumps and it goes up non-stop before market closing, because that was technical confirmation, but fundamental news confirmation came from Wall Street Journal. And if you are trading only technical, then you will always have confusion that this low can break and it can make new low. But these two things together, Elliott wave and macro news together works perfect. So this was your example of bearish trend ending diagonal chart pattern in impulsive wave. Now this is your example in bullish trend, but in corrective ABC wave. And again we start wave counting, then we can call it bottom and we can call it top. Our first impulsive wave W, then counter trend correction X, then again impulsive wave Y, and like impulsive wave 135 extension also possible in corrective wave. Here wave Y is extended into lower degree ABC wave. You can use same alphabet ABC instead of WXY, but I have used WXY so that you do not confused with same numbering. So wave Y subwave is A, B, then C. But again, everything depends on news and your understanding of macro trend, because that bottom was made on FOMC and we already have news right here on this bottom that next hike will be 50 basis point, and this final jump which came after CPI. So based on macro trend, everything was crystal clear, confirmed that it will not drop for next 1 week. So extended wave was confirmed by news. Then we use fib extension tool. Compared to wave A, the wave C target was 1786, the 1.618 projection, and that was top. And from bottom, then wave Y is subdivided into ABC, and wave C is making ending diagonal chart pattern. So from bottom to top, that was overextended bullish trend, and with fib ratio we get confirmation that this is your top. And when we do wave counting, then our first impulsive wave 1, then correction 2, third impulsive wave, then fourth wave correction, then fifth wave which is final wave, and here three wave Y, and lower degree wave C, and further lower degree wave Y. Three impulsive wave are ending at the same time, because that was your CPI and that was overextended bullish trend. And when ending diagonal confirmed, retesting upper trend line 3 times, breakout of lower trend line, then our selling come. And to help beginner intraday trader, when that diagonal was completed, that complete wave count from bottom to top was said in Telegram channel, and it was written clear that trend has peaked at 1786, and that was before drop was started. But when drop was started, few hours later news came that was FOMC bullard that they will hike 7% interest rate, and after AV correction the wave C was started, and that came after the news. So all the wave counting from top to bottom depends on news. And now you compare these two trend, your bearish 135 impulsive wave, WXY bullish wave, then both have ending diagonal chart pattern concept. And if you miss entire trend when it is going down and when it is going up, with this simple chart pattern you can get bottom and top and you can trade. If you see this chart pattern on lower time frame with much clarity, then this was your wave after CPI, and with fundamental everything was confirmed that it will go up again and it will not drop next day until new news come to send it down. So this your first impulsive wave 1, 2, 3, 4, 5. And if you see this wave closely, then wave 1 ended right here, correction wave 2. Then in wave 3, 4, 5, there can be a chart pattern correction which can be in third wave or fifth wave, because book use 135 numbering, but I personally use ABCDE numbering because these wave have nature like corrective wave. Because you see that top to bottom third wave has made a triangle chart pattern in the middle, and if you use wave extension tool compared to this wave, then it did not even made 100% projection and top was made near 61% projection. And this was one of the fastest way to recognize that we are in ending diagram chart pattern. When triangle pattern comes on chart and breakout, but compared to last week, this impulsive wave is shorter in length, and with immediately drawing this trend line, 3 retest of upper trend line confirm that this is chart pattern, ending diagonal pattern. Because this information is not written clear in book, while they say that first wave, third wave and fifth, these three should be corrective wave like ABC, then why we use 135 numbering to create confusion for beginner? So there is always a chart pattern in the middle of ending diagonal. So these were your two example, impulsive wave and corrective wave. Now I will give you example on higher time frame so you can easily understand what are minor difference in this chart pattern. Here again you have ending diagonal chart pattern example on higher time frame like H4. Previous example were on H1 time frame, but this example is on H4. And in this example you will see complete understanding how this complete wave counting with ending diagonal chart pattern works, the previous wave and wave which come after complete of ending diagonal pattern. So let's start with this bottom to top. This is your first impulsive wave, but again understanding of this wave depends your understanding of previous trend. For beginner trader, for your understanding, here was weekly support 1680 and that was super strong support. So you can use that support as a trick that if impulsive wave start, then it will start from here. And trigger was ECB bank's confirmation because they changed a monetary policy which was bullish for gold. Then it jumped, our first impulsive wave came and here was support. So there was expectation that everyone will buy right here if they want to buy gold. So this is how your first impulsive wave start. Then after this top, you cannot get there how this top of wave 1 will end right here. For that understanding, you have to go from H4 to 15-minute time frame so that you can get wave counting on lower level to get this top. So from this top your correction start and we call it wave 2. When this low was made of wave 2, there was Fed FOMC meeting and Fed confirmed that next trend of gold will be bullish. So you know that nothing can stop gold from going up. And when it went up, we call it third impulsive wave, and it was verified by macro trend Fed FOMC, because later Fed changed his mind in Jackson Hole meeting and it made new low. But you have to follow two things at the same time: the wave counting and macro trend. When both go in same direction, you trade, and when both go in opposing direction, you only create confusion for yourself. So after FOMC meeting, third impulsive wave come and it come back, and that was our fourth wave correction. And after fourth wave ended, there were fifth wave, which we call ending diagonal chart pattern in this example. And for your clarity, so that you do not get confused, here you have 135 numbering, and fifth wave ending diagonal has ABCD numbering. Because if you use 135 in ending diagonal, then it is confusing. Beginner trader get confused that fourth wave is going below high of wave 1. So I recommend that you use ABCD wave counting in ending diagonal chart pattern. And since there was support here, so you can do some cheating like student do in exam, that next level wave counting can start from here. So same like bottom, this previous wave top to bottom had 61% retracement level at 1803, and we will use that number. And you know 61% retracement level is always a last key retracement level, and fifth wave is ending right here, so this can be our top. And extension tool for fifth wave and third wave both combined was 61% projection at 1806. So three things: retracement level of previous wave, extension tool for third and fifth wave together, and this ending diagonal chart pattern were predicting top at this level. And if you look closely, then first impulsive wave in ending diagonal according to book, wave 1, then wave 2, 3, then wave 4, then after in last wave 5. In last example you saw there was triangle chart pattern in third wave, while in this example there is a triangle chart pattern in fourth wave. So there is always a possibility that you get a triangle chart pattern inside this ending diagonal pattern. And here upper trend line was tested only 2 times, but lower trend line was tested 3 times. When lower trend line breaks, that is clear confirmation that entire trend has been ended. Then you start selling, because it has two steps: either you sell on retest of upper trend line, which did not happen in this trend, or after breakout of lower trend line. And third opportunity is retest of this lower trend line. But this example did not give retest of lower trend line. Once drop was started, it kept dropping and did not stop. And when this selling start and you draw favorite retracement top to bottom, then whether it goes down or up, you know that it will retest favorite retracement level and no stop before 30%. But it broke 30% in one attempt, came down, also broke 50%, Then somehow it stopped at 61% retracement level. Because fifth retracement level is always a war zone when both bulls who think it will go up fight and bear who are saying that it will make new lower low, they fight in fifth retracement zone. And when everything happened from top to bottom, trend completed, new low was made, that was verification in last that this wave counting was correct, but that is too late for beginner trader. And if you use same as book, then this should be your wave counting 1 2 3 4 and ending diagonal chart pattern in fifth wave, which you can again say 1 2 3 4 5. But for beginner trader all of these number are 1 2 3 4 5 and they are confusing, that here you have gap between first and fourth wave and here there is no gap. That is confusing part, and you have to understand that these are impulsive wave pattern and this is your ending diagonal chart pattern. And there was another chart pattern in fourth wave. And for next level wave counting, when you know this is top and you are 100% sure, then you can start wave counting for next level. But if you do not have understanding of this previous wave, you cannot start wave counting for next level. Now this is another example of ending diagonal chart pattern. Previous example was for impulsive wave where ending diagonal was in fifth wave, but this example is for corrective wave where you have ending diagonal in wave C. So we will start from this bottom and we'll go to this top. Same like student who do cheating in exam, then this is your resistance, and in advance you can anticipate that if there is a top that it will be near this resistance. First let's see visual pattern. You connect high for upper trend line and same you do for lower trend line, and you see it is testing upper and lower trend line one by one. According to books, when priced at upper trend line third times you sell, that is visual language. But here upper trend line was tested 4 times and after test it made double top. So if you sell right here, then all the time you will get confused and you will lost confidence on Elliott wave theory. And book also say that lower trend line should be tested 2 times, that upper trend line testing 3 times and lower trend line testing 2 times. But in this example upper trend line was tested 4 times and lower trend line was tested 3 times. And another entry according to book, that lower trend line breaks and it retests lower trend line, then you sell. But example was completely different, and that clarity depends on your wave counting skill, and you can call it wave A, then correction wave B, and right now from this bottom your next level wave counting will come into wave C, and that wave C is subdivided into lower degree, and that lower degree wave are making ending diagonal chart pattern. So wave counting for diagonal pattern start from this low. So this wave does not count in ending diagonal pattern. So we call it wave A, then correction wave V, then next impulsive wave C, then correction D, then final wave E. or maybe you can call it 135 wave. And here you have symmetrical triangle chart pattern. That means chart pattern inside the chart pattern. Your main chart pattern was ending diagonal. So trick was starting wave counting for diagonal pattern from this bottom, and that was complete 5 impulsive wave. And when that happened and upper trend line was tested third time, that was end of your trend, but it came down and traced back to this high and made double top, and final selling came after double top. And if you compare this chart pattern from books, book have example of impulsive wave 135, and this market giving you example of corrective ABC wave. Book is saying after a test of upper trend line third times it's come down. It is not saying about double top, but market give you double top. So things are similar like book but not exact same. So those are minor difference and you have to be careful about them. And for fundamental confirmation that ending diagonal chart pattern will end here and it will drop in vertical line and you should sell here. This was technical confirmation, but you need macro confirmation. That's what is macro trend is saying. And we had confirmation on this top. And for beginner trader to confirm macro trend, information was shared in this YouTube video on 24 October. Because you were not alone to sell dollar, these three central bankers were selling dollar. That was coordinated attack and it was happen secretly. Because first was Swiss National Bank and we were trading USD They were taking dollar from New York Fed every week and that size was doubling each week. But in later European Central Bank came, in last Beckham Japan also came, but their dollar size was doubling each week. So that was your macro confirmation. And when price was testing this horizontal resistance and upper trend line was testing, that complete wave counting was shared on YouTube and also explained in details. But now you can see after this minor drop retesting lower trend line, it came down, went up, made double top, then it dropped almost in vertical lines, because that was the time when government were selling dollar. So this chart pattern was verified by fundamental news macro trend. When both things together works in same direction, that central banking policy was in direction of selling USD and Elliott wave also predicting instant trend reversal vertical drop, then you trade. So I have given you all example ending diagonal in impulsive wave and ending diagonal in corrective wave in both bullish and bearish trend. But always remember one thing, that image that you see in book and market chart pattern that you will see in trading view will not be exact same. There will be minor difference and that minor difference are source of your confusion.